Good Monday morning, traders. Greg here from MasterTrader. Well, the markets are up here a bit. The way they closed on Friday, while the broader markets running higher into the close, looked like it was an anticipation of a similar outcome to the last results of the French election. So they gapped up at the open here yesterday, and now they backed off and just sideways. So we'll wait and see. Not much to go on here pre-market. Obviously, the weekly trend is still up, and we'll just see how this shapes up here. As you can see, they've already backed off. Now, let's just look at the spiders here, since this does not incorporate on the daily or weekly charts the 24-hour chart. And you can see, the positive close, and with a pattern like this, meaning, a retest pattern, a gap up, a gap that was not closed, an additional gap up, a consolidation at resistance, and then a move above that resistance area and a bullish close near the high of that session into resistance with a weekly chart again in an uptrend. And here was the run up. It started, it started inching up after lunch, and then it ran higher into the close. And well, just this is a 24-hour, so it's just chopping around here. So overall, everything still looks okay. You can see it's a bit of a different look than the futures, which, you've got a red candle, but markets have not even officially opened for 9:30. So we don't know what this will look like. It could look like a green candle, a big green candle. It could look like a bottoming tail bar, or it could look like this by the end of the session. We'll have to see. That being said, we do have a area of support, a small area of support that has been created overnight, and resistance. So, just based on this small amount of data here, we've got these reference points of support and resistance, and we'll see which way it goes. And so above here suggests a retest of the overnight high, and maybe higher, and below here, well, then possible retest here. Now, it's based on the close here. Let's go back to the spiders. Based on this close, a close under this candle's low at the end of the day today would be a short-term bearish pattern suggesting lower prices and maybe the end of this rally, with this election being anticipated and over. What does the market have to go on here? Now, that being said, I can tell you that internals that we look at here once in a while, and I share with our subscribers almost on a daily basis, are still neutral. So, what we historically look for is an overbought breadth internal and an extreme in sentiment, and we still don't have that. So indecisive as far as that goes. That being said, the NASDAQ especially is extended, and it would not be surprising at all to see this back off. Now, to have that happen, we have to see, well, at a minimum, a move under today's low. And if we were to have a red candle today, we'd have at least the start of that. And then do we get a break of those lows here? Now, a red candle in of itself, we'd still be on a wait and see, but anticipation of a break. But with a stock, a market, a commodity, a currency, it doesn't matter. Within an uptrend, we give the benefit of the doubt to the trend. And a lot of times when you get a red candle like this after, let's say, a bottoming tail or green, it's just another consolidation, and it could push higher. We still have this gap higher and then a continued run. So just on a normal situation, some type of a retracement would be anticipated. That's not happening, and we'll see if this can continue to push higher as the weekly chart, here we're looking at the spider, so let's just switch over to the Qs just so we get a clearer perspective on all of that. They pushed higher, 2 weeks in a row from a consolidation. That is not unusual at all. And you can see here was a longer consolidation and then a multiple week push higher. So here you had that run and a consolidation, and then a push. So the most bullish thing prices can do after a momentum run like that is go sideways versus pull back, because it tells us that demand just continues to come in. The Dow futures look the same. Bonds just chopping around here. I mentioned last week, keep an eye on that. It has an inverse relationship with the broader markets, and it is down here near support. Being said, it couldn't get above resistance last week, so just some more chop going on there. No real information, and they've actually backed off. Pre-market oil, that got clobbered, tried to hold support and broke lower. Got extended, and now the bounce, but big bottoming tail bar. We'll see what they do here. But pre-market, they are not being able to push any more higher. They went sideways, break, and now a little support here and a break. So right now they look like they could go lower. I'd keep an eye on this $45 level if you're an oil trader. What else we have going on here pre-market? As far as gaps, HZNP, big gap down. This could be a gap play. Just looking at some of my others here. Not too much really going on here of significance. Amazon up some more, but in the context of this pattern here, really not a big deal. But up $5 here pre-market. And Costco, yeah, that's interesting. 174 into this gap. So just as a broader strokes here on gaps, this is not what we're looking for a gap play. Even though it may go lower a little bit, it may actually pop up, but it's not in a clear area or a void, meaning it didn't gap down under, and that would be a giant gap. But say like if it gapped down under 165 and it's got this room here, that would be a nice play, looking for a continuation lower with that gap lower. And Snap should be interesting this week. It's going to report earnings for the first time. I believe it's on the 10th. I mentioned this a week or two ago over here. So it's up against resistance, but I really like the weekly chart on this. And we'll see if this can shape up here. And we'll see what those numbers look like. So that's it for today or this morning. Good luck this week, and we'll talk tomorrow.